Hello, I'm regular European investor and welcome to my channel. In today's video I am going to compare stocks versus real estate and share my real estate portfolio as well. In addition to this, I will also give a detailed breakdown and calculation on my properties when it comes to return on investment perspective. From my personal point of view, real estate can currently give much higher return on investment than the stock market due to leverage through mortgage, and that is the main reason why I prioritize it over other investment forms. However, I am now getting to the point where I am maxing out my borrowing limit. On the other hand, I do not recommend to put all your money in real estate investments, and your whole portfolio should be diversified as well. One of my main diversification tools are stocks, and in this video I am going to compare these two investment types to give you better view about pros and cons of each investment type and identify what fits your today's needs best. If you have different perspective or thoughts, please share those in the comments. So, point number one is that real estate is much more expensive, while in the stock market you can start investing by having just an euros or more. I personally use Revolut application, which allows you to buy fractional shares. It means that you do not need to have full amount of stock price. Point number two, stocks have higher risks as it can decline by 40% in just a month, which is less likely to happen in a real estate market. Thirdly, you can get much more emotional in the stock market due to volatility, while real estate is more stable, but there could be a market crash there as well. As you know from the example in late 2000s. People usually do not start selling their real estate properties when the market crashes. Point number four, you can get around 4% in dividends in stock market, while some extremely good real estate investments can bring you up to 10% from rent or even more. However, appreciation is higher in stock market. For example, S&P 500 can increase by 7% taking into consideration inflation, and same scenario is less likely to happen in real estate market. Also, another thing worth mentioning are taxes. However, it depends from which country you are. It is wise to check which investment type has more tax deductions and lower rates. In my country, for example, investing into stock portfolio is much cheaper and tax-wise. But please do your own research. Point number 7. Stock portfolio is much more passive as you do not have to look for new tenants, repair your property, fix leaking taps, or solve other property related issues. Moreover, you can watch over your stock portfolio remotely by using your smartphone and internet from the beach somewhere in Spain. While in real estate scenario, you have to be present and attached to specific area, especially if you are using Airbnb or booking.com. Selling stocks is just one click away, while selling real estate can take few months or more. Understanding real estate can be much easier than stocks. You just need to set the right price and pay your taxes on time. While in stock market you have to do a lot of research. Unless you choose ETFs, then of course it's less time consuming. And my favorite point 11 is you can leverage your investment by taking a mortgage in real estate market. You can have just 15 to 20 of total value and property is already in your portfolio. But you need to have good credit score and stable income for that, definitely. Also, negative Euribor rates are on your side in current economical environment. In this video, I will share two of my portfolio examples later. And the last point is that you have full control over the decisions taken when it comes to real estate. You can do whatever you want with it as long as it is legal. Contrary to fact that you don't have that much power when it comes to, let's say, Apple or Tesla's future plans, if we speak about stock market though. And if you have this power, Mr. Elon Musk, then most likely this video is not for you, my friend. Please share your thoughts. Which investment type do you prefer? Is it stocks or real estate? How do you diversify between those two? My current portfolio has 2 apartments near city center in my hometown, which is also a capital city of my EU country. Before we start digging into financial details, I just want to mention that this calculation is covering only out-of-pocket money on monthly basis, and few things are not covered. For example, part of mortgage paid off, which is also growing your portfolio value and taxes. So let's start with my first property. I bought it in early 2015, which was a recovery period from real estate crisis. I was closely monitoring real estate ads on daily basis and noticed this undervalued property, which was around 5 or even 7,000 cheaper than the usual price. Closing the deal was a real struggle, but I'm not going into that many details over this video. So I bought it at the price of 53,000 euros. As of today, monthly rent for this property is 400 euros on monthly basis, which adds up to 4,800. But let's dig deeper into monthly expenses. So as of today, I am paying 183 euros each month for the mortgage, which can definitely increase if Euribor rate pops up from negative zone. Monthly insurance is just 5 euros, and it can be much more higher depending from the country. Next item, real estate agents. This is an optional expense, but I wanted to add it to calculation as well, as majority of people are using agent services, but not me personally. I gave it 10%, which is 40 euros each month. Another 5% is dedicated for repairs, but you will see your final number after few years of renting when historical data is created. So it's 20 euros in my case. And the last part are covering periods when your property is not rented and stays empty. I call it voids, and it's around 1 month each year on average, so it's 32 euros more. So monthly total expenses are 280 euros. So if we take out all expenses from monthly rent, it adds up to 120 euros each month, which is just about 1,440 euros on yearly basis. Of course, this is changing over time due to interest on mortgage and rent price increase or decrease in your area. For example, during COVID crisis, it has decreased. Before in this video, I mentioned point 11, which stated that you can leverage your investment by taking a mortgage by having just 15 to 20% of total property value. And that's basically what I did. So in the last part, I will take into consideration only money out of my pocket, which is down payment of 15% and fees to close the deal, which is around extra 1,000 euros. If we divide our yearly income by the total investments and multiply by 100, we will get a final return on investment number, which in this case is 16.09%. So it means that we need just a little bit more than 6 years to get our all invested money back, which is amazing if you compare it to stock market. Moreover, as I bought it just after the real estate crash, official property value has increased by 32,000 in those 5 years till today's date. Of course, you have to pay taxes from that profit and pay all the bank fees to close the mortgage. So that is not the total amount you will receive in the end, but still, it's a decent amount of profit left after everything is covered. But it's not all sunshine and rainbows. Let's take a look at another property, which was bought at latest economic peak just before the corona lockdown kicked off. So formula here used is the same. So the deal was closed at 106,000 euros and current annual rent is 6,000 euros. Mortgage payment is 307 euros, and other expenses adds up to another 123 euros, which is a total of 430. Monthly income is just 70 euros on monthly basis and 840 euros on yearly basis. As this is my second property and it was in extremely bad condition, which means that last renovation was done 38 years ago. You can imagine how it looked back then. I was asked to have at least 20% as a down payment to go through with this deal. Let's add up the fees and place everything into return on investment formula. In the end, we will have a result of 3.79%, which means that it will take 26 years to get all my invested money back. It doesn't look good at all. However, there is another side here. And this is more a risk investment strategy, which I don't recommend for everyone. I bought this property in an unique area, and it also has a lot of development coming in the next 5 to 10 years. For example, new parks are being built here. Building is near a historical part of capital city. Also, infrastructure is being developed as well. I see a lot of potential in this place, so my expectation here is to have more benefits from the property value increase rather than rental income. And during the 1 year period, its official market value has increased by 14,000. However, I had to invest extra 6,000 euros just to make it rentable, so I wanted to deduct this amount from total value increase. These 6,000 euros are also not added to return on investment formula. But to have it all transparent, final percent should be 2.97 if we add this up. If you're interested in the whole refurbishment process, I can make an extra video on that topic. Just drop a comment below, as it is not in scope for now. However, I don't want you to think that real estate market value keeps increasing continuously. It depends from the area, country, and economic situation. Here is a good overview of housing and rent prices for the period 2007 and 2020 in EU. And the reason I chose this period is because it had a real estate-driven financial crisis, which most of you still remember, hopefully. So please do your own research before starting investing in real estate, and feel free to ask questions. As you can see here, for example, if you are from Italy, Greece, or another country from the bottom part of this chart, your market value might have even decreased. And the countries on top, they can get a decent profit in the long run. However, if you're not planning to sell your property, there's a high chance that your rent income will increase over the long run, unless we are looking at Greece example again. Of course, this is very basic overview, and that is the average. So dig deeper in your geographical area to have the full picture. Also, I would like to remind that in order to boost dialogues around stock investment, I am starting a challenge in this channel. Top 3 of voted stock suggestions received from my subscribers during September will be monitored during next month, October. And I am planning to give away free t-shirt for the person suggesting best performing stock for that month. Unfortunately, I have not received any suggestions from last month, but still looking forward for your input for this period. I am not professional or licensed investor, so do not take my videos as an investment advice, please. I build this channel only for entertainment and educational purposes, or to boost your own research. Please subscribe and hit the like button if you're interested in investing and found this video useful. Thank you for watching, and see you in my next video.